In this video, I'm going to show you how to use ICT optimal trade entries to maximize your win rate. Let's dive right into it. So as you can see on my chart, we currently have 6 optimal trade entries, and here I'm going to explain each one of those. So they're fair value gaps, discount and premiums, breaker points, order blocks, optimal trade entry with Fibonacci levels, and also box entries. And all these 6 are used as in combination with each other to create an actual optimal entry for your strategy or for your trade. And let's understand each one of those. So first of all, what you want to see is a stop hunt followed with break of structure or shifting market structure. So as you can see, you're going to have the last low followed with lower low and change of character or break of structure, however you want to call this. And then what you will be looking from here, you're going to look out of one of the 6 options. One is you're going to wait for fair value gaps, and then you're going to enter. This will be a fair value gap entry. Next, what you have, you're going to have a discount or premium. So whether you're going to go into discount or premiums. So let's say you are willing to buy, you're going to wait for the price to go below the 50 level, and you draw this from the previous low to the high, from where the break of structure occurred. So you make sure all the range is including the premium of the range and the discount. So once you enter into the discount zone, you're gonna buy, which is below 50. That's how it goes for the discount levels. And then you have a breaker points. Basically, when the break of structure occurred, there was like a small order block that got mitigated, and then price is reversing. Then you have an order block, this is a breaker block that got filled in, and then the price over there. And that actually has to be aligned with either fair value gap or maybe break of structure, maybe another order block, or maybe optimal trade entries, one of those few. So this is rarely works. Most of the times something works is fair value gaps and actual order blocks. So as for the order blocks, what you have another stop hunt, break of structure, then an order block followed from the previous low that was created after the change of this move. And then you have price reversing, touching this order block, and then going up. And of course, you're going to place your stops below the swing lows, always below the swing low on each one of those, so you don't get hunted. And then you have optimal Fib entry, which is basically you enter off the golden Fibonacci zones. Once the move happens with break of structure, you draw out the Fibonacci zone from this high up to this low, and then you're gonna have this below 50 Fib level from 61, 72, and 78.6 would be your actual golden entry zones. So from 61.8 up to 78.6 you want to enter, and then 88.6 becomes somewhat valid, not really valid zone. So I would be careful when entering zone, but if you have any sort of confluence, other these two with these 3 feeling good, you're gonna enter from here. And then box entry is very simple. The price reverses literally from the point where the stop hunt actually occurred, so you're gonna enter from this zone straight away. Now actually let's go into the chart and understand how this looks. Now let's go to the 5-minute chart and analyze our entry. We're gonna go through the market open. It starts from 9, 8 to 9, 8 to 10 on GMT +1 and 8 hours. So we're gonna see what we're seeing here. We're gonna see the change of character. We had an accumulation happening over here. This was an accumulation. Oops. We had an accumulation happening here, as you can see, and then price reversed here. It happened last stop hunt where it cleared out these liquidities that was lying down. It paid down and fall with a break of structure, which is worked out here. And now what we're going to be looking for is some of the entries which we discussed. So let's look for the fair value gap. Where do we have a fair value gap? Fair value gaps are located in here, in this zone, like this. Or you actually, because I filled out from here because price retraced back and then went back up. So I'm filling out up to here. This is an imbalance zone. So we have fair value gap. It filled in fair value gap and then went up, right? Also, what do we have here? We have an order block. You just go from here to here is an order block. Let me just change the colors so it's more easy for us to see. You have fair value gap, you have an order block, and then what we have a breaker block right over here. I'm gonna mark it out into 5-minute order block. You have a breaker block right here, and fair value gap, breaker block. Now we do not have a stop stop hunt was occurring in this zone and we do not have a box entry here, but that would happen. Now you can see like literally how so many confluences are aligning with itself. Now also if you want to see premium or discount, you can draw out your box and see up to, sorry, here, just mark it down, from here to here. As you can see, we're below, we went to discount zone, you can also buy. And then what you also have, you have also Fibonacci from here up to here, which is we entered 61 zone. As you see, everything is perfectly aligning. And if you want to enter the trade, there will be one of 3 confluences that will align. As you can see, in this trade, we have 6 optimal entries. What we had, let's dive in, we have break of structure, liquidity, stop hunt. This occurred, price is going down, and then we broke, came back. Now what's happening here? Only difference when you're entering would be your profit and loss. So if you enter from this block, your 1 to 2 risk to reward ratio will be from here up to here below. And then if you write 1 to 2, your 1 to 2 would be probably 17.9 pips, right? Almost 18 pips considered commissions on order blocks. Now let's go and understand on fair value gap. If we had a fair value gap from here up to here, draw, fair value gap entry would be from here up to here again, and then we have only 15 pips, 2 pips less to hit 1 to 2. Now let's go Fibonacci levels. If we have, actually let me give the stop loss here, so it's pretty much the same always, 15. Now we have Fibonacci zones. Let's draw out Fibonacci zones. You have from this low up to here, and let's say we enter it from 61. We can see 1 to 2 risk to reward ratio would have been here, and it's only 12.5 pips. Now if you're entering from the breaker block, which is around here, breaker block, you have trying to place this correctly, 1 to 2 would be around 17 pips. And yeah, as you can see, only difference that comes out is this. And if we had like stop hunt here, we do not actually get enter ever, so it's fine. Or maybe you place from here, you get enter, it's to retrieve 1 to 2 would be only 11.4 pips. So as you can see, only difference for these optimal trade entry strategies is the risk to reward ratio. And the higher the confluence and more aligning there, the higher will be probability of you winning the trade. There you go.